Good morning, everyone. Welcome to lecture 4 of our e-banking course. Today's lecture focuses on cybersecurity, risk management, and fraud prevention. As banking services continue to move online, cybersecurity has become one of the most important challenges facing banks worldwide. Every day, millions of customers transfer money, pay bills, and access their bank accounts through computers and smartphones. While these technologies make banking faster and more convenient, they also create opportunities for cyber criminals. By the end of this lecture, you should be able to define cyber threats in banking, identify common types of cyber attacks, explain their impact on banks and customers, discuss preventive measures used by banks, understand new technologies that improve banking security. Let us begin by understanding what cyber threats are. Cyber threats are malicious activities that target banks, financial institutions, or their customers using digital technology. The objective of these attacks is usually one or more of the following: stealing money, stealing confidential information, disrupting banking operations, damaging the bank's reputation. Unlike traditional bank robberies, cyber criminals do not need to physically enter a bank. They can attack from anywhere in the world using computers and the internet. Because modern banks depend heavily on information systems, cybersecurity has become a strategic priority rather than simply an IT issue. Let me now discuss the impact of cyber threats on banks. Cyber attacks have serious consequences. The first consequence is financial loss. Banks may lose millions of dollars due to fraud, theft, compensation to customers, or system recovery. The second, loss of customer trust. Bank depends heavily on trust. If customers believe their information is not safe, they may move to another bank. Another impact is damage to the bank's reputation. News about cyber attacks spreads quickly through social media and new channels. Banks may also face legal penalties because governments require banks to protect customer information. Cyber attacks also cause business disruption. Online banking services may become unavailable for hours or even days. Finally, banks spend large amounts of money improving cybersecurity after an attack. Let me come to the common cyber threats in banking, and I will start with phishing attacks. One of the most common cyber threats is phishing. Phishing occurs when criminals pretend to be a trusted organization, such as a bank. They send fake emails, text messages, or create fake websites. The goal is to trick customers into revealing usernames, passwords, PIN numbers, credit card information. For example, you receive an email saying your bank account has been suspended. Click here immediately to verify your account. The email looks genuine. However, when you click the link, it directs you to a fake website that steals your login information. The best protection is never clicking suspicious links and always checking the official website address. Malware. Another major threat is malware, which means malicious software. Malware is software intentionally designed to damage computers or steal information. There are several types. Viruses attach themselves to legitimate files. Worms spread automatically across networks. Trojans pretend to be useful software but secretly install harmful programs. Spyware secretly monitors user activity. Keyloggers record every key pressed on the keyboard, allowing criminals to steal passwords. Banks use antivirus software, firewalls, and regular software updates to reduce malware risk. Ransomware. Ransomware has become one of the fastest growing cyber threats. In a ransomware attack, criminals encrypt the bank's data. The bank cannot access its own files. The attackers then demand payment, known as ransom, to restore access. Even if the ransom is paid, there is no guarantee that the data will be recovered. Therefore, banks focus on preventing ransomware through regular backups, employee training, and a strong security system. Distributed denial of service, DDoS, and identify theft. Distributed denial of service attack, or DDoS attack, floods the bank's website with enormous amounts of internet traffic. Imagine thousands of fake customers trying to enter the bank's website at exactly the same moment. The website becomes overloaded and stops working. Customers cannot access online banking services. Another important threat is identity theft. Criminals steal personal information such as national ID numbers, passwords, bank account details, credit card information. So using this information, they may withdraw money, open bank accounts, or apply for loans under someone else's identity. Insider threats. Insider threats. Not all cyber threats come from outside the bank. Some come from inside. These are called insider threats. Employees or contractors may intentionally steal information. Sometimes mistakes also create security problems. For example, an employee may accidentally send confidential customer data to the wrong person. Banks reduce insider threats by limiting access permissions, monitoring employee activities, and providing continuous cybersecurity training. ATM fraud and social engineering. ATM fraud includes card skimming, card cloning, PIN theft, ATM malware. A skimming device secretly copies information from customers' bank cards. Criminals then create duplicate cards and withdraw money. Social engineering is another dangerous technique. Instead of attacking computers, criminals attack people. They manipulate victims psychologically. For example, someone may call pretending to be from the bank and ask for your password or verification code. Banks constantly remind customers that legitimate employees never ask for passwords over the phone. Data breaches. Data breach occurs when unauthorized people gain access to confidential databases. The stolen information may include customer records, transaction histories, financial statements. As mobile banking grows, mobile threats are also increasing. These include fake banking applications, insecure public Wi-Fi, mobile malware. So SMS phishing, also known as smishing, customers should only download banking apps from official app stores and avoid using public Wi-Fi for financial transactions. Preventing cyber threats. For the banks use several security measures. These include multi-factor authentication, data encryption, firewalls, intrusion detection system, continuous network monitoring, employee cybersecurity training, regular software updates, disaster recovery plans. Cybersecurity is not one-time activity. It requires continuous monitoring because cybercriminals constantly develop new attack methods. For customers also have responsibilities. They should create strong passwords, enable two-factor authentication, avoid suspicious emails, verify communications from banks, update devices regularly, monitor account activity, avoid public Wi-Fi when conducting banking transactions. Remember, cybersecurity is a shared responsibility between banks and customers. Let us come to the emerging cybersecurity technologies in banks. Technology continues to improve banking security. Artificial intelligence can detect fraudulent transactions in real time. Machine learning identifies unusual customer behavior. Blockchain provides secure and transparent transaction records. Biometric authentication uses fingerprints, facial recognition, or iris scanning instead of passwords. Behavioral analytics study how customers normally use banking systems and identifies unusual activities. Zero trust security architecture assumes that no user or device should automatically be trusted. Finally, security information and event management systems known as SIEM help banks monitor and respond quickly to security incidents. And now let us review what we have learned. Think carefully before answering each question. Ask yourself, what is phishing? How does ransomware affect banks? Why are insider threats dangerous? What is the difference between malware and social engineering? How does multi-factor authentication improve security? These questions will help reinforce today's concepts and prepare you for examinations. Today we discussed the major cybersecurity challenges facing modern banking. We learned that cyber threats can originate both inside and outside banks, and that they can cause serious financial and reputational damage. Fortunately, banks use advanced technologies such as artificial intelligence, biometrics, encryption, and blockchain to improve security. However, customers also play an important role by following saving online banking practice. Thank you for your attention. In our next lecture, we will continue exploring important topics in electronic banking. See you in the next class.